The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, we've been searching for some positive news in this grain and oilseed trade, and I would say for the most part this week we've had a favorable one in terms of price action. It might not be price levels that every producer loves, but maybe it's a sign of hope, so to speak. A general optimistic feeling into the weekend through Friday's trade. Let's talk about where things stand. Joining us now for market analysis, Ted Seifert with Zaner Ag Hedge. Ted, how are you, buddy? It's good to talk to you again.
I'm doing great, Jesse. It's great to talk to you, man. Thanks for having me on the show.
It's always nice when we can talk a little positive about the grain and oilseed complex. You know, a couple up days in corn. We've had some good strength in soy this week. I mean, you know, Ted, these markets have just been beat up so much. It's nice to find a little bit of positivity here throughout this week.
Yeah, I'm glad you didn't mention wheat, right? Because hey, it tried on Friday. I mean, that's good news, right? But wheat on Thursday set a new low since the contract low. But we had been holding that 560 mark in December, Chicago wheat. And we closed below it now, back above it on Friday. So we'll see. Just to get wheat out of the way, I really do feel like wheat is going to be the follower if there's a bigger rally in corn in particular, but row crops, right? I think wheat has a chance to follow along. But the thing that's been the problem for wheat is even though we can look at some maybe globally friendly fundamentals for wheat, the domestic balance sheet for wheat at 900 million bushels or just shy of, man, that's a lot of wheat to chew through. And global bullish features, and I'm not saying they're all bullish, but I mean there's some hints of bullishness in the global balance sheet. That only matters for us if it translates into big exports. And while we have been seeing some good weeks, we've had some not great weeks too, but we've seen some good weeks for wheat exports. That's a tongue twister. It's going to have to go on for an extended period of time before we can talk the USDA into raising exports again, because they just did that two WASDs ago, and really doing anything to shrink that global balance sheet, right? Because we know that this winter wheat crop is coming out, as good or maybe a little bit better than expected, and the spring wheat crop has been improving, and so for me, it hinges on we need to find more demand, and it would likely have to be in exports in order to actually get excited about wheat. The only way we can really do that is, again, we see those exports, but it'd be very helpful if corn rallied too, because if corn rallies, then we can start talking about the possibility of feeding more wheat. I don't know how much we'd have to rally the corn to really get that conversation going. But I just don't think wheat can be a leader to the upside at this point, Jesse, without that big splash in exports and the idea that, hey, our global or our domestic carryover is going to get to a more reasonable level rather than flirting with the idea of a billion bushel carryover in wheat. So
yeah,
to get that out of the way, we did that. Okay.
Well, I would say to that too. I'm gonna jump in on you here with this wheat complex. It's almost felt at times to me this week it's been a bit of an anchor on the corn rally. We've had a couple up days. There's been talk of bouncing off this downtrending channel in D's corn, but wheat's kind of felt like an anchor in some ways, Ted.
Thursday for sure, right? I mean, corn, beans were the darling of the day on Thursday. And even though you can say, well, beans are playing a little catch up because corn had its strength earlier in the week. But, corn struggled, was down on the day, but mainly because wheat was venturing into those new recent lows, right? And so, yeah, I absolutely feel the same way. That's a great point, Jesse, is that, yeah, wheat has been an anchor on corn to some extent. Now, though, what a difference a week makes, right? We went a week ago at the end of the week last week, we were talking about a 187 national average yield for corn, and we were just so very negative about everything. But then all of a sudden this week, we're all very, very positive. And the question is, well, what changed, Jesse? And I'm going to say, at the end of the last week, I just feel like we might have been way too bearish for our own good. Everybody was just, so, it wasn't going to take much to spark a little bit of hope, right? And with the funds being as short as they were, it wasn't going to take much to spark a little bit of short covering as well, especially since you had the right technical setup for something like that to happen. And then the big change, obviously, was the forecasts, right? I mean, when we talk about forecasts, we say that, all year long, the longer term forecasts coming from any, I'm not picking on anybody in particular, Jesse. I mean, starting with NOAA and then, trickling down to all the private forecasters, it's just not been, panning out, right? So the long term forecasts aren't to be trusted. At least that's the feel from the market right now. But the short-term forecasts have been fairly accurate. I mean, that's the nature of forecasting, is that the shorter time frame that you're looking at, the more likely that it's going to be accurate. The short-term forecasts have been pretty good. And so when we came in this week, you had this heat ridge starting to build back in, and throughout the week, that's really intensified. And then you've had the precipitation kind of falling out of the forecast as well. So as it stands today, Jesse, we're looking at, I'd say, the most threatening short term, and by that I mean the 6 to 10 and 8 to 14 day forecasts. These are the most threatening forecasts that we've seen since really the beginning of the growing season. And that's caused some enthusiasm in the market. And then all of a sudden, we're talking about pollination issues and wrap being too tight, and seeing the pictures on Twitter of some issues. And yeah, I mean, look, we've all been waiting for this moment to happen, right? And so it's been a good week. You've had a very nice bounce, but to this point, Jesse, or to this moment in time, I should say, we've not really broken out of any major technical, downtrends, right? And so, to me, this was a market looking for a spark that we got in the form of a short-term weather forecast, and we've fulfilled these objectives, these bounces that markets like to trade in these technical ranges, and I think we've done that. Now, do we have more extended upside potential, Jesse? And I got to say, I'm leaning very heavily to the idea that we do not. Sure, it is a possibility that this is an overall change in the weather pattern, and we're going to see a repeat of what we had last year, which is a very hot and dry finish. No rain in August and above normal temperatures. No rain, to start September. We take a corn crop that some people were estimating to be 187 national average yield. Maybe that drops to a 177. And the beans in particular, the month of August are going to get really roughed up. And maybe we're only at a 49 national average yield on beans, 48, something like that. Possible. Sure. Anything's possible. I don't think that's likely. I really do think that, with corn, for the vast majority, we'll have gotten through pollination by the time these warmer temperatures come back and this below normal precipitation. I think the damage to the corn crop might end up being really rather minimal, because of how good that corn crop is right now and the timing of when pollination is happening versus the timing of what these forecasts are saying. And then if we do get back to more normal temps and more normal precip, I think this corn crop still has a very, very tremendous chance of finishing out very, very, very well. And then, again, the forecast that we're seeing, I mean, these are the things that happen during the summer, right? We have these heat ridges that build and then dissipate and then kind of come in and out. I mean, that's just the weather pattern. It's I think very normal. The risk is that it sets up and stays. And at the moment, I'm not feeling like that is really what we're going to see. I'm not a weather forecaster. But in my years of experience of watching weather, I don't see this as being tremendously threatening to crops in the time frame that we're looking at. And again, I don't really feel like this is a big change in weather. It could be, and if it is, that's great. But I do really think it's a great time to be making some cash sales as well. I mean, this is the bounce that I think we've all been looking for. This is, every year, Jesse, with the exception of maybe last year, when I think we should have rallied in late July, August, and into September, we didn't. We saved that rally till January, February, when the USDA finally did adjust production. This year, I think we're more sensitive to something like that because of what happened last year. But every year we look for these weather rallies to sell. And every year when they happen, everybody says, oh my gosh, corn's, this is going to go sharply higher. And there's reasons why we go sharply higher. And more often than not, we don't. right? So I think you have to just kind of take a step back, realize that corn's bounced, had bounced 23 cents off the lows
Hmm.
after everybody was so gloom and doom. Beans bounced like 43 cents off the lows. Well, hey, okay, this is your another chance. And I know they're not wonderful prices. I know we're not, doing jumping jacks about, even when you add the 23 cent, these aren't, nobody loves these prices. But they're a lot better than where we were last week or where we started the week this week. And I think when we look back, these will be some pretty good sales. So yeah, I do think you want to get something done here. You can do things to re-own the upside if you haven't already,
Hmm.
because I really don't mind the idea of having the re-ownership strategies in place before making those cash sales, in order to allow you to be comfortable making those cash sales, right? I mean, for times just like this, Jesse. Um, but I mean, you can look at something like that if you really feel like you need to. I'm not really pushing that terribly hard after the bounce that we've had this week. I think just outright making the cash sales and relying on those previous re-ownership strategies if you have them. But I do think it is. I mean, you got to think long and hard about making some sales after this week.
And always remember that risk of trading futures and options can be substantial. Ted Seifert with Zaner Ag Hedge joining us for our market analysis here today. And Ted, a lot of great points you made. And my biggest thing that I always remember is we got a long ways to go before we finish out these crops, corn and soybeans here across the Midwest. Let's talk on the soy side. Pretty good week. Bean oil, the driver, a little quieter bean oil trade on Friday, but I mean, what have you been tracking on the soy side here, Ted?
Yeah, I mean, look, soybean oil has the reasons to go higher. I mean, that's where this newfound demand is going to be, and it's really added to crush margins, and so crush has been strong. Crush continues to overperform, and I think the USDA did a very good job last week of not only making some adjustments on their balance sheet, but also their explanation of all of it. I think was really very good. It was nifty, is the word I've used, and kind of un-USDA ish because a lot of times they sort of take the punt, wait and see sort of approach. They're say the thing that they say all the time at data user meetings and things like that is policy in place, right? But a lot of the stuff that they did on the crush and the explanation for it on EPA proposals is not actually policy in place currently. That's stuff that will come into place further on down the line in October. But they're accounting for that now, which I think is really, I think, progressive of them. I was surprised that they did make the changes that they did, but I like it. I agree with them. So, yeah, that crush should be really very strong. But at the same time, they cut exports pretty aggressively, and they explained that one too, Jesse, by saying that South American supplies, Brazil in particular, will be plentiful, and really cut into the first portion, maybe the first third of our export window. And that really goes along with the lack of export sales that we have on the books for new crop. Yeah, we had a pretty decent week for this this last week with over 500,000 metric tons sold. None of it to China, though. We still don't have China explicitly on the books. Yeah, there's been rumblings this week about China poking around for bids. There was a lot of talk that the flash sale that we saw, I think on Wednesday, of 120,000 to unknown destinations might have been China. And the trade this week chose to be a bit more optimistic about a trade deal or trade with China in the future. But I don't know if we have any real concrete evidence of that. I think, like we talked about in corn, we needed a spark to be a little bit more positive, and I think we had some things really started by weather, started by strength in corn. And so when you have a little bit more positivity, people are waiting in the wings to be vocal about what they think the bullish factors are, and that was that. But until we do actually start seeing a bunch more sales or some sort of concrete evidence that there might be a trade deal with China, that China is going to come in and buy a lot more of our soybeans, I think you just got to imagine that really the only thing that could be really that positive for beans going forward is if this is a major weather pattern change and August is going to be really hot and dry. If that's not the case, though, Jesse, I think you have to operate under the idea that we probably have that 310 million bushel carryover that could only be growing if we're a 53, 54, 55 national average yield. And I really think the possibility is there for that, given good weather. We've not really finished off a good soybean crop since like 2016.
Hmm.
Um, I don't want to say we're due for a year like that, but one of these years we'll do it. And I'm also going to say that I do think that we've not really seen the top end performance of soybean yields like we have in corn. I think it came on earlier for corn when I'm thinking about the late 2000s into the 2000 teens, where corn yields consistently impressed, and that was like our golden era of technology, seed technology, planting practices, where the upside in corn yield was really a lot stronger than what I think most of us realized at that point. I don't think it's quite as much anymore, but I think that upside lies more so on beans. So if we get a good finish to this bean crop, weather-wise, I think we might all end up being really surprised by how well the beans performed. And in my book, with the lack of Chinese interest in our new crop exports at the moment, that soybean carryover could get pretty big. So my I worry more about downside risk in soybeans right now than I do in corn. But because it's an August crop and not a July crop, there's also that risk. So it's going to be interesting to see how things play out in soybeans. It's going to be interesting to see how obviously weather plays out for August. But I do want to caution everybody, if we have a good finish to this growing season, I'm very worried about what the downside might be for soybeans.
Give me your hot take on the outside markets if you have one. We're talking financial stocks, energies, you name it. I know all this chatter about issues between President Trump and Fed Chair Powell. Maybe that's the featured UFC fight on the White House lawn that they've talked about. I'm not sure, but
I'm a big fan of
yeah,
UFC, and it would be awesome if we had Trump and Powell out there. Huh?
it could be interesting to say the least. I mean, your thoughts on that or anything else in these outside markets? I know that's been a lot of talk this week.
Yeah, and one last thing on Trump too. Has anybody invited him to the crop tour? Because I feel like he might go. Right? I mean, we're an invitation away from having the president of the United States crawling in and out of corn and bean fields in Nebraska and Iowa. But who knows? Anywho, yeah, outside markets. Look, I feel like crude oil has stabilized after the crazy volatility that we saw in June. I'm leaning more towards downside. I've been skeptical about the economy as a whole for a little while, but it's certainly performed well. I feel like there may just be too much optimism there, and that at some point we might be due for a bigger break. But you don't really have signs of that happening on a chart right now. Yeah, you had a bit of a down day in the Dow on Friday, and it does look like we're maybe topping out for now and maybe rolling over. So I'd say personally, I have some concerns with the chart, but that might just be a manifestation of my overall sort of bearishness on the economy as a whole. But as far as it pertains to agricultural markets and things like that, at least for the moment, there is no concern there. The consumer doesn't have very much concern. So if I tie that into, like, say, the cattle complex, which made another new high here this week, we don't have any concern about the consumer stopping their purchasing habits, at the butcher's counter. Now, we are in a seasonal time frame where we get past the 4th of July holiday weekend. The first half of the summer, everybody's celebrating the good weather, and the grilling season is fast and furious. But then we get into later July and August, and that's the summer doldrums where people get kind of, tired of it. Not tired of it, but we lose a bit of that enthusiasm. And so demand kind of drops off until the Labor Day holiday weekend.
Mhm.
And so we do have that seasonal decline, and I do wonder if we might see the cattle complex top out sort of seasonally here, and maybe have a bit of a correction. The overall underlying supply fundamentals they haven't changed. I mean, it's still bullish, and as long as demand, even though might, like we said, seasonally cool off a little bit, as long as there's not a big break in demand, I don't know if there's a big break coming for the cattle complex. But to tie this all together to your original question, if we were to see a bigger break in the stock market, if there were more concerns about the economy, if people started to worry a bit more about their jobs and about their 401k, we might see that change in spending habits. And if that happens, that's when we can say, all right, we're due for a really sizable correction in the cattle complex. Because I mean, we've been treading into historically high prices for quite some time now, Jesse. At some point, markets correct themselves, and the old adage is, the cure for high prices is high prices. Well, that's not been the case for the cattle complex, or for beef for that matter. But at some point, it very well might be, and you never know what's going to trigger that. Like I said, I think it would probably be commodity or economy driven. But to that point, I mean, even your smartest guys on all the, talking heads, major news agencies, nobody has any idea there.
No, they definitely do not. Always a wealth of knowledge. Ted, if folks want to reach out to you there at Zaner Ag Hedge for a conversation, how can they get a hold of you?
Yeah, you can call me directly at 312-277-0113. Aside from that, you can find us on the web at www.zaner.com. You can sign up for my afternoon recorded commentary that you can listen to at your leisure. I try to record that around 2:30 every day. And then we are revamping our newsletter. We are going to have a brand new offering here very soon, and it's going to be really, really exciting, Jesse. So, be on the lookout for that, because you're going to want to see it.
Always appreciate the insight. Ted Seifert, Zaner Ag Hedge. Thanks for joining us on Market Talk. Have a great weekend, Ted.
Pleasure's mine, Jesse. Thanks for having me. You too, buddy.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.